Hi CA students, let's revise CA Final AFM Chapter 8 Mutual Funds. Practical question 20. On 1st April, an open-ended scheme of mutual fund has 300 lakh units outstanding with NAV of 18.5. Open-ended scheme is nothing but there will not be any restriction on entry or exit. Means anybody can buy the mutual fund at any point of time and can sell it at any point of time. There will not be any restriction. At the end of April, it is at the end of April, it is issued 6 lakh units at opening NAV plus 2% load. So 2% load is the brokerage as brokerage like or in the expenses adjusted for dividend equalization. We'll see what is this dividend equalization in a minute. At the end of May, 3 lakh units were repurchased. Repurchased in the sense again bought back from the unit holders at opening NAV less 2% exit load. Here also exit load signifies the charges or the expenses adjusted for dividend equalization. At the end of June, 70% of its available income was distributed. In respect of April to June quarter, the following additional information are available. There is a portfolio value appreciation, nothing but the capital appreciation. Income of April and income of May and income of June is given. We are required to calculate income available for distribution and issue price at the end of April and repurchase price at the end of May and net asset value as on 30th June. So there are these three requirements we have to, 4 requirements we have to calculate. Okay, now we'll see what is this dividend equalization. And okay, I have given one small example here to understand it in an easy way. If dividend equalization is not there, let's say if a mutual fund unit is valued at 100 rupees and dividend is paying yearly at a rate of 10%, and the year starts from 1/4/2014 when the mutual funds are issued, and then it got redeemed at 31st March 2025, or we'll see at this point of time 31st March 2025 the year end dividend is issued only at the year end, which is 10 rupees, 10% on 100 rupees. Now Mr. A is buying this MF on 1/4/2024 and Mr. B bought the mutual fund on 30/3/2025, which is one day before the dividend issues. Now both people will get the dividend of 10 rupees each on 31/3/2025. Now there is no value for Mr. A because he has holded this mutual fund from 1/4/2024 to 31st March 2025. But Mr. B just bought the mutual funds a day before and got the dividend. Both people are getting the same returns, which will be not justified, right? Hence, dividend equalization is a method used by all the mutual fund schemes. So in this case, what will happen? Whatever the extra money or the accrued income, accrued dividend, let's say in this case only, Mr. B will buy the mutual fund at 110 on 30/3/2025, NAV adjusted for dividend equalization. Hence, because he'll be buying a mutual fund on this date on the NAV, right, net asset value, at that time this dividend equalization will get adjusted to the NAV. Here the price of the NAV is just 100, but the dividend equalization 10 rupees will just added to the price. Now what will happen? The extra 10 rupees will be moved to a dividend equalization reserve. So dividend equalization adjustments are made at the time of entry or redemption, and if you see it will get moved to a reserve. Then what will happen when the time of dividend issue, both people will get the dividend, but Mr. A has invested only 100 at the time of 1/4/2024 and he is getting a dividend of 10. Mr. B has bought it at 110 and then he is getting a 10 rupees. So ideally the price again falls to 100 for Mr. B. Hence it is justified that Mr. A will get the benefit of the dividend. So here I have used only dividend as an example, but in actual scenarios and in the problems we'll be seeing the accrued income portion. So it is not just the dividend from 1st April 2024 till 31st March 2025. Whatever income has accrued, let it be a capital appreciation, let it be a capital gains, let it be regular income, or what type of income has accrued on this mutual funds, will get adjusted through this dividend equalization process. So that's what is dividend equalization adjustment is. Now, as we can see here, even in this case, the current problem, they have mentioned clearly that it is open-ended scheme. So people will know that when they are going to issue the dividend, and one day before they can buy that, or when they are going to distribute, let's say in this at the end of June they have distributed 70% of its available income. What if before this June people will buy, and then they will get the income distribution? So that's not fair, right? Hence dividend, all the prices, whenever a unit was, let's say at the end of April it issued 6 lakh units at opening NAV. So NAV plus dividend equalization adjustment is there, and then when they repurchase again, there also this dividend adjustment is there. Hence it is the NAV is properly valued. Now going to the requirements of the questions. First thing is income available for distribution. Now calculation of income available for distribution. The first income from April is this 22.950. Income from April, before April, whatever people, let's say this 300 lakh units outstanding, those people will get this income as they have holded this mutual funds. Hence 300 lakh units multiplied by per unit. So actually we are going to find out the per unit of the income, so that dividend equalization will be collected, because we need to know, right? If we know this much only is the income, that much portion we have to add it to the dividend equalization reserve, and then release it from the reserve whenever repurchase is happening or whenever the dividend is distributed. So because that's what we have seen in this example also, the dividend 10 rupees got added to Mr. B's NAV adjusted, right? The same case here, 22.950 is the income I'm going to receive in the month of April. So even if people at the end of April, even if 6 lakh units are issued, at that point of time I have to collect it from the new people who got the units, right? So hence 22.95 lakh divided by 300 lakh units will give us 0.0765 per unit. Now this much we will be collecting from the new unit holders, which is 6 lakh unit holders. So for 6 lakh units we will be adding the per unit, then the value will become 23.409 for 3 lakh 6 units. Now income from May also get added, but at the end of May repurchase was happened. So before that repurchase we will be adding the income to the existing units, because the it should be cumulative, right? It should get added in the FIFO basis, like that. So this much portion of income, which is 34.425 divided by 306, will give us the value to be added, because that much has to be distributed to all the units and then will be grossed up. So in this case 34.425 divided by 306 will give us 0.1125. Already they are having an accumulated or accrued income of 0.0765. Adding this, it will become 0.1890. Now what has happened, at the end of May 3 lakh units were repurchased, right? So this 3 lakh units repurchase, we will be giving back this dividend equalization as these people, let's say for this 3 lakh unit of people, has their income accrued. But if they leave, they will not get anything at that point of time, as the income was not distributed at all, right? So we have to give them out of this dividend equalization. So there is an accumulated income of 0.1890. That much portion will be given to the repurchase. So that much, when we repurchase the units, we will be giving this much portion to them, which is nothing but 3 lakh multiplied by that accumulated income of 0.1890. So this much will be reduced from the income distribution. Now, previously the accrued income is 57.8340 for all the units, right? At the end of May. Now this much portion has reduced, so it became 57.2670 lakhs for 303 units. And the accumulated income is 0.1890. Now what has happened again, income for June 45.40 got added. So again this will get added to the existing unit holders. So 45.450 divided by 303 will give us the per unit how much to add to the existing unit holders. So adding this to will give us 3.3390. That is the accrued income 303 lakh unit holders are having as accrued income. So consolidatedly 102.7170 for all the unit holders as on the end of June. Now what has happened, at the end of June 70% of the income is distributed, right? So 70% of 102.710 or this accrued income of 0.3390 per unit, either of the cases, it will be same only. 70% 0.2373 in case of per unit and 71.9014 for the whole will get reduced from the accrued portion, because only 70% of the income is distributed, right? Balance 30% remains. So as on the end of June, for 303 lakh unit holders, 0.1017 is still remaining. It is not distributed yet, it is accrued, and 30.8151 is still there. Okay, now this is the income distribution, the income available for distribution. Now the second requirement is calculation of issue price at the end of April, which it is so easy. The opening NAV, we know that it is 18.75, and 2% we have to add it, as it has a entry load of 2%, which is 0.375. Then equal dividend equalization paid on issue price. So we have already done here in this dividend equalization collected here, which is nothing but 0.0765. so that will be the portion to be added. Hence the issue price at the end of April will become this much. Now they're asking repurchase price at the end of May, what it will be. Opening NAV, because they told opening NAV plus 2% load, then here repurchased at opening NAV less 2%, add and adjusted for dividend equalization. At the end of May, during this repurchase, we know that the dividend equalization is this much, 0.1890. so the and 2% load also has to be reduced. So opening NAV minus 2% load, add 1890 will give us the purchase price at the end of May. Now the final requirement is net asset value as on 30th June. So how will we calculate that? At the opening on 1st April, 300 lakh units were left over, multiplied by outstanding, 300 lakh units were outstanding, multiplied by 18.75. So 5625 lakhs is the opening NAV. After that, what all has happened? Value appreciation has happened, and 3 streams of income, 3 months income got added. So 425 will get added. Then 3 months income received will get added. Then there was a fresh issue also. So fresh issue means money will come in, right? So that 6 multiplied by, we have that issue price 19.2015. So 6 lakh units multiplied by 19.2015, 115.2090 got added to the existing portfolio. Now then what and all has happened? Repurchase has happened. That means money will go out. asset will go out from the portfolio, correct? So 3 lakh into, we know that price at what repurchase also happened, so 18.569, this much money will go out. And income also distributed, yeah, 70% of the income also distributed. We know the price of the income distribution here, 71.909, that much income got distributed, so that also will get reduced from the overall. So closing NAV is 6140.9101, and the closing units will be 300. In between 6 lakh got issued and 3 lakh got redeemed, so plus 6 minus 3 will be the outstanding. And even you can see in the income distribution table also, the leftover units is 303, so you can put that directly, 303. And dividing this will give us the closing NAV per unit as on 30th June. This is nothing but 20.2670. Thank you.